All right. Thank you, everybody, for coming today. Today, we will be talking about price action and time. Essentially, what we're trying to cover during this session is what is price action and how do you identify it? Based on TA, based on chart structures, wick structures, various signs. Um, and then what is time consideration in trading, especially when we're talking about options such as the MNQ, so NASDAQ. Why is time important? Why do we always talk about market open, market close? And then how do we use all of this? So I will let my good friend Warrior Adam start the session now.
Thank you so much, Medrich. Yeah, so today's lecture in particular is one of my favorites because these two things, price action and time, were essentially the things that I was chasing after when I started trading. I used to tell myself, okay, we have a graph. The graph has two x's. On one axis, you have time, and the other axis, you have price. So these are the only two things that you need to trade. So obviously, as I didn't have any answers for it, I kept on chasing after it, and I was like, okay, maybe there's something more to it. But then eventually, once I found my model, how to trade, and everything, at the end of the day, it just came down to price action that is on your y-axis and time that is on your x-axis. Yep. So essentially, what is your price action and what is it made of? Trading view, those are your candles, your candlesticks. And what kind of candlesticks do you have? Trust me when I tell you this, there's only two types of candlesticks: a buy candlestick and a low candle, the sell candlestick. Or for ease sake, you could just say a buy candle and a sell candle. So on your screen, you can see the green ones are buy candles essentially, and the black ones are sell candles. And these candles and the pattern and the structures they form, sorry, not patterns, but the structures they form and how they form it, that's your price action. And that is how you make your decision to go into a trade, where you want to trade, at what time you want to trade. That's the second most important confluence. Where you set your stop loss, where you set your take profits, they are all on the candles that make up your time. What do you call it? Price action. So if you come to an individual candle, a candle essentially has, what does it have? It has four components, right? So if I come here and I use this. So what are the four components a candle has? Your open, high, low, close. That's it. These are the four things a candle has, and these are the four things that you will need and base your decision for entering or not entering a trade, setting a stop loss, taking a take profit. Okay. And these, where an open happens, a close, a high or a low or a close happens, these aren't random, these are generated. Okay. These are driven values by institution. If a candle opens in a particular place, that should be an indication to you that, oh, this is about to happen. If a certain high is made, why is that high made? Where was the candle reaching out to? If low is made, why was that low made? Where is the low reaching out to? It has to reach out to a specific POI, a specific point of interest for the institutions, obviously, not for retail. And then close. I personally believe if you're someone who does top-down analysis from daily down towards the 15-minute, weekly down towards the 1 hour, your close is by far, candle close is by far the most important when your day is ending, when your week is ending, when your 1 hour is ending, your 4 hour is ending, your 15 minutes is ending, because that's your biggest indication of where price is going to go to. Another thing I want to highlight is the prices where the open, high, low, close, or the OHLC happens. So if I take an example to this green candle, oh, sorry. So look at the candle from Wednesday, 23rd of August. And if you see, you have everything written. Sorry. Right below micro, E-mini, NASDAQ, you have the open, you have the high, you have the low, you have the close. Now, what I want you to know here is that price, in terms of its price action, will always have its open, high, low, close in fractals. And what does that mean? Anything on the left side of the decimal point can be any value based on where a specific index is in terms of its price at that point. But what I want you to focus on is what is on the right side of the decimal places. 002570, sorry, 00255075, and again 00. These are your fractals, and this is where open, high, low, close will always happen in these 4 quarters, 00255075. And this isn't random. You can literally look at any candle. Let's bring it here. Look at this 00000000, and that's it. Yeah. Bring it here again. Look at the open 25. Look at the high 50, low 25, close 50. Any candle. Again, look at that. No value other than that. Now, this is very signature to your price action because price always moves in fractals. Always remember that. You will never see a candle which does not follow these patterns, right? So if I try to bring a candle, let's have a candle with a big wick. Yeah. So for a green candle, how would you know whether a candle is a buy candle if I make them all black or like something of sorts? So for candle, sorry. So this for a candle would be your open. What does it do? Goes up, closes here. This would be the low of the candle. This would be the high of the candle. Sorry for the scribbly. I'm not that good with these things. Right? So for a green candle, you're open, close, low, high. So the low and high will always be the same, but the open and close is what determines the candle. If a candle opens at a particular value and it closes above it, that's your green candle. Consequently, if you bring this one, what happens here? This yeah. So you're open, you're close. Sorry. You're low, and then you're high. Right? So 2 types of candles, having your open, high, low, close, and your open, high, low, close is a very big determinant for your price action and what price is going to consequently do thereon. All right. So let me just perfect. So now let's come back. In order to determine your order flow, what you need is your candle open and your candle close, because that's what's going to tell you where your order flow is. All right. Let's take an example from here till here. What happens here? Candle open, closes, makes a high, makes a low. What happens next? If you see over here, candle opens above the previous bullish candle or the up candle. So what would you expect The gap between these two, oops, the gap between these two, that is an imbalance, is going to get filled by your wick, and then it's going to keep on going up and close above. So when this candle closes above this candle, that gives you a very big indication that we're supposed to or are probably planning on rallying onto the upside. Why? Because it means we're going somewhere to reach out to something on a higher time frame. Since this is a daily time frame, when you're going up, you're probably reaching onto something on a point of interest of a weekly time frame. If you're going up on a weekly time frame, we're probably going to for a point of interest on the monthly time frame. Right? And that's exactly what happens. Go up, close. Candle closed. Now look at this. Where did candle close? Above these highs. Yep. So consequently, when you're going down, try to go down. You would expect that, oh, okay, price has rallied up from here to here to here to here. Now it's going down. Just going up just to go down again. But how would you know when a shift in structure has happened again and you're not going down, but you're rather going up? That's where your candle close comes into play. Until and unless a candle does not close above or below a specific highs, or lows, you cannot confirm a market structure break. You can confirm market structure shift, which can be if the candle had closed below these high, but it would have left a wick high up. You could say, oh, there's a market structure shift, but not a break in the market structure. A break in a market structure will only be confirmed if your candle closes. And that is exactly what happens. You rally down, pulls back up, tries to come back down. This is the point where you do not do anything at all. Then we'll look what happens. Moves up, candle closes above this high. That is an indication alone of what price action to be going up, right? That's exactly what it does. Consequently Thursday, Friday, Monday, because Saturday and Sunday and Nasdaq is it's a weekend, so no market. So yeah, Thursday, Friday, Monday, Tuesday, even Wednesday, completely bullish. And how would we know that you would have a continuation of a bullish run? Because over here your price closed above, right? What happens next? Drop down, accumulate, consolidate, slight push up. After you've pushed up, at this point, any of these 4 points, would you as a trader tell yourself, okay, I'm going to hit the buy button and I'm going to go up? Obviously, no. On what occasion or what specific point of interest on a price action perspective would you say that, yes, I'm going to go up? Only if price had closed above this high would you have been given the confluence that we're going to further push up. We further have to push up to grab ourselves the point of interest from an even higher time frame, that is the weekly or the monthly. If price does not close above this point, only wicks above, the candle does not close, you do not consider yourself to be taking any sort of a long position. You're just going to wreck yourself. You're going to give the institutions all your stop loss. Now let's see on the example on the flip side. Price tries to push down. Okay, again, tries to push down. Now look what happens here. Price closes. The candle closes below these relative lows. Again, indication that we're going down, right? Because what has happened is that we have achieved our higher time frame grab of a point of interest from a weekly or a monthly perspective. Price tries to push down, breaks the structure over here. Candle closes below this low. You have a shift, consolidate, again another pull up, and then eventually closes in below these lows, giving you an indication that Because my candle is closed below these lows, I can now be a seller. I can now sell alongside the institutions and go completely short. And that's essentially what happens. Completely you drop down on the NASDAQ until what happens? Price rallies up. Again, small little consolidation, shitty day. Do not trade these. Rallies up. What happens? Closes above this high, right? But then what happens? Look at where the open is. The open is close to the close of the previous candle. And price strongly wicks up and has a final pull down. Where does price pull down below these equal lows? Sorry, below this low? No. Does that indicate that we're going down? No. It still indicates that we're going up because price is closed above. On this occasion, price is closed above these highs. We just had a pull down. And why did we have a pull down? So that we can grab our point of interest from a higher time frame. And by us, I mean the institutions, because those are your main drivers. Price came down here because they had a specific point of interest in the form of liquidity or a fair value gap. I'm not going to go into the details because those are just lectures from the future, where you'll have a better understanding of why it is what happens. Why is it that a candle that is closed up did not just rally up and had to have that big pull down? That's just another lecture for the future, which we have obviously planned out. So coming back, Thursday does not take the low. The candle does not close below till Friday. We are not going to sell. Again, the same thing. What happens? Does not close below any of these lows. Now here's the point of interest. Your last bit of confluence that we are going up indeed is by Friday the 25th of August. Look at the candle. Look at where it opens above the previous day. Then what happens? Wick down, forms a low. Candle does not open below it. Only wicks down makes a low. To grab a point of interest of a higher time frame or any other sort of confluence in the form of an order block or like anything. And then you start your major rally up. Friday finishes, Monday starts. Monday starts, leaves a big imbalance between the the close of Friday and the open of Monday. Wicks down, starts moving up. The next day, same thing, starts moving up. What happens here? You have your high again. And what happens at this high? Your price is closed at or above this high. What does it indicate? It indicates that we're not done yet and that we're still going to move high up until we reach that point of interest of a higher time frame. And that's exactly what happens. We keep on moving up for the next 3 days, and that's it. Target achieved. And just for an insight, I know this is a part of a future lecture, but look at where price comes down to. Price comes down straight to this fair value gap. Look at this. Perfect. That is your point of interest at a higher time frame. And this is why your candle tried to reach up from this point up until this point. Tries once, pumps up. You have your close above, completely rallies down, does not close below over here. Instead, starts accumulating to pump up and up and up until it reaches your point of interest. That is this fair value gap at being the point of interest. And look at what happens as soon as you leave that point, you reach that point of interest. Straight dump again. And you will keep on dumping until you do what exactly? Keep on dumping until you reach here. And this will be the point where you will get to decide again if your candle closes below or above, whether you have to go long or you have to go short further down. So that essentially is how your open, high, low, and close operates in terms of price action. And this is how you interpret it. If I have a high and a price closes above the high on any time frame, whether it's a day or a 4 hour, 1 hour, 15 minutes, 5 minutes, if price closes above this high, you tell yourself, okay, price is closed above this high. For the long term or for that particular day or few hours, I know that price is trying to go up to reach to a specific point of interest on a higher time frame. If I see this on a 5 minute time frame, or rather if I see this on a 15-minute time frame, let's actually go down to 15. So let's mark this. Say we're on a 15-minute time frame, and look at this. Price came down, went up, came down. So look at this. When price comes down from here, does your price candle close any of these three candles? Does it close below this low? No. What does that indicate to you in terms of price action in the form of open, high, low, close? That we are not going down, right? And if we're not going down, where are we going? There's literally only two buttons, a buy or a sell. If we're not going down, we're going up. How would you know as a trader confirmed confluences that we are going up and that we're not consolidating for that day or days or hours? If your price closes above this, and that's exactly what happens. Your price starts rallying up, and on this 8:30 price closes, aggressively goes through this high and closes above. And when you have an aggressive run that closes up, that is a very strong indication of the fact that what's going to happen? We're going in that particular direction. And that's exactly what happens. Price tests this high, one more time over here, tests it one more time, and look at what happens next. Look at this. Straight up. One candle giving you a 317 thick move. That's ridiculous. If you're in this long, you could have like passed one challenge, one static challenge of $2,000 easily. But that's not the point. The point is to not be greedy. Yeah. Price runs up, and where does it run up to? Does it not take this high? It does take this high. What happens once it takes this high? Does it close above or below the high? It closes above the high. What does that mean? It means that price is not done yet. It still wants to go high. It still wants to go higher to achieve a point of interest on a higher time frame that could be anything less than more than 15 minutes, 30 minutes, 1 hour, 2 hour, 4 hour, up till a month. And that's exactly what price does. Goes up, reaches here. And once it reaches here, that's it. If you're buying here, all your institutions have bought, all the bought orders at this point are going to be sold. And that's exactly what happens. Start selling, start selling, start selling. Come down, drags back up again. Why does it drag back? Again, that's a discussion for another day, but just for the sake of those that are watching who have basic knowledge of trading, price comes back into this fair value gap, drags back up into the fair value gaps, one drag back again until it starts going down again. And the same concept applies again. What do we have? What do we see once we start seeing this price come back down? You see this low. Has priced any of these candles in the first instant at 12:30 and 12:45 close below? No. Does that mean we're going up? Not necessarily. You need other confluences, but we over here are solely judging price movement based on the close of the candle. Then again, 1 o'clock, does candle close below? Yes, it does. That gives you an indication that price further wants to go down. But before it goes down again, what does it do? Just like it did over here, came back down, retraced up, came back down, retraced up. Again, what does price retrace up to? What does price retrace up to? Fair value gap. What happens then? Price starts moving down again. What is your next target? This low. What do you want to see once you achieve this low? Does the price close any of these candles? Does it close below this or not? In the first instant, respects it, respects it, respects it again. The bodies will always respect it. And that's how you know that price does not want to go down. And when I talk about bodies, there are only two things inside the body, an open and a close. And the close is what we're looking at. Body respects it, price does not close above, and 1, 2, 3 candles. The fourth candles runs through it. And once it runs through it, what does that indicate? We want to go further down. Where do we want to go down, and how far do we want to go down? Until and unless a higher time frame point of interest has been achieved, which it did over here. And what's your point of interest? Is it not this fair value gap? So by now I think you have an idea of how these gaps, how powerful these gaps are. So it's over here. Look at that. To the wick. Does the price candle close below this gap? No. What is that an indication? That is a two confluence indication for you. Price has wicked to form lows to find support, true support in the form of a gap. It has not closed below, it has rather closed above. What does that mean? Price wants to go up. What is your final piece of confluence that price wants to go up? Again, highs. This high. Price rallies up, closes above. Is that an indication that we're going up? Yes. What does it do? Keeps on going up until a higher time frame point of interest has been achieved. And this just keeps on going on. So the point I'm trying to make here is that the open, high, low close of the candles is something as a beginner should never ever ignore, because at the end of the day, the open, high, low close is what determines the price of the candle. And when you put a shit ton of these candles together, that gives you your price action. And this is what makes your order flow. At the most basic level, the building blocks, you could say, for these price action and candles are your open, high, low, and close. And more so specifically, your open and your close that'll determine your order flow, whether you want to go up for a specific time frame, you want to go down on a specific time frame. And your highs and your lows will basically tell you where price has reached up or down to in terms of a point of interest on a higher time frame. Then you have certain candles that are of certain types. You have small candles, you have candles that have a long wick, makes a very high, big low, but in terms of the open and close, they're very close to each other. Those, in terms of every candle, they have their own story. It tries to tell you something. But to keep things simple, if you see a candle that has a very long wick and a very small body, which means that your open and your close are very close together, but you've gone down to make a low significantly or gone up to make a low significantly. This means two things. In terms of the institutions, if you've made, let's actually take this candle as an example. Let's take this candle as an example. So this candle has its open and close very close to each other, essentially no body, which means not much buying or much selling has been done by the institutes at this particular day, on this particular day. Why? Because on this particular day, it is doing two things. And that's two things are the reason it has formed such a big wick to the downside. the first thing that it does is it tries to reach to a point of interest on a higher time frame. And the other thing that it does is that it's gone down to grab your stop loss. And by your, I mean quite literally yours, the retail people, everyone, everyone that has longed, or rather, yes, longed late. If you're supposed to be longing here, you've probably longed here somewhere, probably here or here. And obviously, once you've longed, that's where your stop loss is going to be, slightly below it. So this long wick is just a grab of stop loss. It grabs your stop loss because you've traded in the wrong manner. And by the wrong manner is where the second most important thing on the chart comes. That is your time. If you've traded at the wrong time, say you've taken a trade over, here, and you've placed, sorry, yeah. So say you've taken a trade over here and you've placed your stop loss at this particular time. Or rather, I'll just bring it here. This looks pretty small, but this is a 215 tick stop loss because I'm on a daily chart. But this is just for the sake of example. Say you take a trade on the 30th of June and you start going up. You reach till this point. Ideally, this point is where you should be closing your trade because your candle, none of these candles have closed above this high, indicating that you don't want to go up. But you don't close your trade. What happens essentially? Price comes on back down to, let me just fix this, yeah, over here. Price comes on, tries to drag back once, nothing happens again, shitty day. Then at this particular point, at this particular days, the institutions, they don't buy or sell much. They just come down to grab all of your stop losses, achieve all of your lower, higher time frame point of interest before what happens? Before it starts rallying up without you. Why? Because it has grabbed all of these stop losses, because this is where majority of people would have placed their stop losses. Majority of those people who have taken the trades at the wrong time of the day with the wrong confluences, the wrong price action TA. The institutions comes down, it grabs all of your stop losses, and then your idea was right. Your execution was wrong because you took it at the wrong time. And the institution knows that because the algorithm knows that. The algorithm knows where majority of the people have put their stop losses at. Majority of those people who have taken their trades at the wrong time, they've placed their stop losses. And it takes those stop losses, the institution orders are filled at that point, and it just starts going up. So this is basically how you could use your open, high, and low and close. Now, in terms of time, so time obviously is a very vast topic of discussion. But in terms of trading, or in terms of Nasdaq or your stock exchange futures trading, there are only a few things you need to know. I won't dive into very much details. Those are things that are to be discussed later on in details. I will dive deeper into time-related trading methods later on. But essentially, you should know that you have, in terms of volume, you have like 3 exchanges. That is your Asia, your London, and your New York, with the highest bulk of volume being traded in the New York session, right? You have specific timings for these markets that are open and specific timings that they're closed at. Instead of eating your heads over it, I've just, yeah, bring this here. There's a beautiful indicator that I found. It's called Sonar Lab Sessions. And oh, wonderful. So, as you can see, these boxes, red box for Asia starts at 8 o'clock New York time. Always remember to have your time set on TradingView for New York. So 8 o'clock New York time trades all the way to 5 o'clock. in the morning. Then you have your London, starts at 3 o'clock, trades all the way to 12 o'clock in the afternoon. And then you have New York, which starts at 8 o'clock and trades all the way up until 4:30, if I'm not wrong. 5 o'clock essentially. And then between 5 and 6 o'clock, all the markets are closed. And then at 6 o'clock, again, the market opens. And this small gap between Asia and New York is Sydney, if I'm not wrong. And yeah, basically no volume. But you have three major markets, that is Asia, London, and New York, in their specific timings with a small overlap. Now, as a general rule of thumb in trading, at least for futures and for Forex as well, is very much known that price will do four things in terms of price action. All right. So price can always ever do four things. It can either accumulate, which means it'll just be like a dead straight line towards going towards the right. As you can see here, accumulating. Once price is accumulated, it'll go towards the point, it'll reach out towards the point of interest on a higher time frame. After that, price will start manipulating. And by manipulation, I mean straight up manipulation, which would mean that for a particular day, say Thursday, we expect price to go up. We want to have more buyers. We are completely bullish on the Thursday. That doesn't mean that the moment the clock hits Thursday, price is going to start running up until the next minute before Friday. For that Thursday, you will have an accumulation. Then you will have a manipulation, which would mean that if we're bullish on the day for Thursday, we're going to start dropping down. Why would we want to drop down? Why does price manipulate? To achieve a point of interest on a higher time frame, to fill all the institutional orders, to grab all the retail stop losses before what happens? The third thing that happens during the day, distribution. Price will start distributing in the set direction for that particular day. And where will it distribute up until? It'll distribute up till the point of interest on a higher time frame has been achieved. So three things: accumulation, manipulation, distribution. Every single day, on every single time frame, all the way from your yearly down to your 15-second time frame, all of these time frame have a accumulation, a manipulation, a distribution. This is distribution, and then the fourth thing that is optional for the day is obviously always followed by either a continuation of the distribution or a straight up reversal towards the end of the day or continuing into the next day. So accumulation, manipulation, distribution. How do you bring that into time? So into time, as a general rule of thumb, your Asia and your stock exchanges are notorious for accumulation. So mostly in Asia, you will see price accumulating. It'll be dead. It won't, even if it goes up or low, it will not show that much of a movement, but it'll mostly just be stagnant, accumulating around. Obviously, that doesn't mean that it will always do that. In most of the cases, it does. Then you have certain scenarios where it doesn't. I'm not going to go into details because those are rarities. But as a rule of thumb, Asia always accumulates, followed by London, which always manipulates. It'll go into the opposite direction of where the price has to reach out to towards the end of the day, followed by New York, which has the highest volume, will always distribute price. And on this day, on a 15-minute time frame, you have a perfect example. What happens here? You have Asia starts. What does it do? Look at this. No movement whatsoever, completely accumulating, then starts moving up to a point where London opens. As soon as London opens, what does London do? straight dump, straight up manipulation of at least a 485 ticks. Completely manipulates down, keeps on manipulating until what happens? 8 o'clock. The moment New York opens, rally up, 652 ticks up, 540 ticks down. And what is this down? Your down is your reversal that is followed by your distribution. So what is it always? Accumulation, manipulation, distribution, followed by either a continuation or a reversal. And in this case, your reversal, which was 540 ticks. Now, based on what I taught you about the open, high, low, close, once price is completely distributed up to this level over here, your higher time frame point of interest has been achieved. Has any candle closed above this? No. Price starts dumping down, closes below these lows. When it's closed below these lows, that's your cue to go bearish. But again, you have to wait for your retrace into a specific confluence. That is again this fair value gap. Price goes up into it, pulls back, goes up into it. Institution grabs all of your stop losses. It has achieved its point of interest at a higher time frame, starts straight dumping down, straight reversal down. And this keeps on happening every single day, literally every single day, day in and day out, week in and week out, at particular times, which I will get into later on in later teaching sessions. Again, price reaches into a higher time frame point of interest, tries to go to the opposite direction, cannot do it because your institutions do not give your orders out in bulk. It has it in different batches, so it pulls up into another confluence, such as the fair value gap, straight goes up into dumping, either continuation or a distribution. So, on a broad scheme of things, this is basically what price action and time is, and how you can use the price action in terms of the open, high, low, close with the time in terms of sessions such as Asia, London, and New York, what they do at a particular time, how they do it, if you expect Asia, London to manipulate down, how would you know in terms of price action that we actually are manipulating down? Well, if you look over here, you have a low made. Your candle over here at 415 closes below this low. You are in London. You have achieved a higher time frame point of interest for Asia over here. You've made this low. Price pulled back into this, pulled into this, comes back down. Candle closes below, right? Now you know we're going down because it's London. I have a candle close below this low. What will I wait for? A pullback into what? Another confluence. Now look at this. Does this candle not go into this? Pulls up into your confluence and straight on manipulates down. All right. Until it manipulates completely down in London, up until where? A higher time frame point of interest, which will always be on the left side. Again, I will not get into details of this. What happens at this point? Let me just remove this. What happens at this point? New York opens. New York has opened. London has manipulated completely down to achieve a higher time frame point of interest. If you're still skeptical about whether you should be going long in New York or not, because New York is what? Distribution. Again, you can use your price action, your open, high, low, close to determine whether that is so or not. Again, you've approached London, you've approached New York. London has made a higher time frame point of interest to the downside. Your orders has been filled. Price starts moving up. You make your candle close above this high. Your last confluence is that we are indeed in New York going up, distributing towards the upside, opposite to manipulation from the downside. And then look at what happens. Again, candle closes above, starts going up, and it just keeps on doing this again and again every single day. Obviously, that doesn't mean that if London manipulates down every single time, New York has to go up. There are certain conditions you have to have sound knowledge of price action. Even if you don't, even if you don't, and this rule of thumb on any particular day is not followed, how would you know based on just price action and time, just simple knowledge of price action and time as to what is going to happen? If you're in London and you've made your low, let's say you have a candle that closes below, let's say you have a candle that closes like this. If I'm in New York and my candle on a bigger time frame, such as a 15-minute time frame that I'm on, bigger enough time frame for me to make a confluence. If I have a candle that closes below over here, that's where I have to tell myself, okay, we're in a continuation. Our accumulation, manipulation, distribution is happening, but the only difference is that we are going to distribute in the same side that we have manipulated into. Why? Because based on my price action, my candle is closed below this low. So we're going to keep on going down, not completely, maybe a little bit, but that little bit inside a New York session on at least 5 micros, giving you at least 100 ticks is a lot of money. And if you take a trade where you go in the direction of the manipulation during New York and you take your complete profit, and then after that, your price starts moving in the opposite direction, starts going up to distribute, that's fine because you're still taking your trade, everything's done, you should be happy. But you should bear in mind that not every day you're going to have an accumulation, manipulation, and distribution in the same direction. You will have them in the same session. Your Asia will 90% accumulate, your London will always manipulate. But it's a matter of New York whether it wants to distribute into the opposite direction or not. And again, something as simple as open, high, low, close will help you determine whether that's going to happen or not. And there'll be only a minority of instances where this specific pattern will not be followed. You start coming back. Look at what happens here. Asia starts accumulating, starts dropping down. Now, see, Asia had a very, very big range, a very big range. But this would still be accumulation in terms of London. Why? Because this is a bigger range. It's 745 ticks instead of 500. So in respect to that, in respect to uh, London, Asia is still accumulating. What does London do? Starts manipulating down. What does New York do? Start distributing up. Let's have another example. Asia accumulate, comes down. London starts moving up. Higher time frame point of interest achieved. New York starts stumping down. And this just keeps on happening. Accumulate, manipulate, distribute. Accumulate, manipulate up, distribute down. And the more you go back, the more this is just keep on going to happen. It happens every single day, day in and day out. And simply by having an idea of the time and the price action in terms of only the open, high, low, and close on any particular time frame, you can easily execute these trades. So that's pretty much it. This is just a general overview of price action and time. And if you're someone who's new and someone who doesn't understand much, or even if you're not new, if you want to make a decision to enter a trade or not opposite to the bias of a particular session, your open, high, and low and close will always be there to help you. And your sessions, whether you're in Asia to accumulate, London to manipulate, and then New York to distribute to the opposite direction. And to make that decision from manipulation moving on to distribution, how would you confirm that? Open, high, low, close, below candle close below a low, candle close above a high, that's your sign to either push the sell and buy signal, respectively. So yeah, guess that's it for today. There's obviously much more deeper dive into time and price action, more so particularly into time than price action. But that's a discussion for another day. So yeah, that's I guess that's all for today. If there's any question, I'll be more than happy to answer. Any question during this session's end or any preceding days before the next session starts, you can just always tag me and I can answer any of your questions. Questions that aren't related to the previous day lectures or questions that are related to something advanced, I'll be more than happy to answer. It'll just give me a general idea of the people that are in the group and how much do they know and how much do they not know about trading in general and trading in futures and price action and how much of a general depth of a knowledge you have. So I'll be more than happy to answer as long as you tag me, please.
Thank you very much, Adam. That was really good. Do you mind just opening the chat just to see if there's anybody who's written anything? So if you click on public VC, there should be a chat box. Yeah, on the up top right corner. There we go.
Yep. No
So no
question. My
questions
friend just
there.
says,
That's
please
okay.
record the stream. I will watch tomorrow night time for sleeping. Okay, good night, buddy.
Yeah, no, that's fine. We completely appreciate that the timing and the dates are quite problematic, when we're dealing with an international audience, obviously. Um, but yeah, I mean, this was really good. Thank you, Adam. I think a very logical breakdown of how price action works and the importance of time when you're dealing with option futures, essentially in stocks, especially Nasdaq. I think, let's see, is Vincent, do you have any questions for us, or are we good to wrap things up? Okay, no, that's fine. I think his headphones are actually on mute. Fine. So I'll record this and upload this later on today or tomorrow. And I hope this was helpful, guys. Um, do interact with the video itself, like, subscribe, whatever. Even if you don't, it's okay, I guess. Any feedback is always welcome, whether that's positive or negative. We are always happy to hear from you guys. Thank you very much, Adam, and I hope you all have a nice weekend.
Yeah, you're welcome, man. Goodbye.